Joining us right now, Potomac Wealth Advisors founder and president Mark Avallone. Mark, good to see you this morning. Thanks very much for joining us.
Good morning.
Your thoughts as the president travels abroad today and its impact on markets?
Well, it's good for the president to take a break, a little bit of a reset after the hectic midterms, that contentious press conference. This is what a lot of presidents have done just to recalibrate for the second half of their term. I think what in his favor is that a lot of these European leaders are less popular than he is. Macron is in the 20%. Merkel's reeling from her migrant crisis. Prime Minister May is struggling with British exit from the EU. So the president, on a relative basis, is very strong going into this, and the EU economy is not nearly as strong as ours. So it's a great opportunity for him to inch forward on some of those trade skirmishes that we're having with the EU, because I think if he can tone those down, it's going to be a big plus for the U.S. market. If at the end of the day, the only party we're having a trade skirmish with is China, right, that's good for U.S. stocks.
Yeah, and then markets this morning are lower. Mike, we haven't really heard from you post the elections. Markets this morning, by the way, take a look. Futures pointing to a lower opening. Federal Reserve left interest rates unchanged yesterday. Central Bank offering a mostly upbeat assessment of the economy yesterday. They hinted at rate increases at the next December meeting. That was no surprise either. We are expecting that. Mark, weigh in there.
Well, I think what the Fed's going to, they have all the power right now. If the Fed tones it down a little bit and lets the U.S. economy run, I think the stock market continues here. Look, the Fed has no reason to be aggressive right now. You mentioned the bear market in oil earlier in the lead. The oil market is down 20% from its peak. That's telling you something about global growth overseas. We don't need the Fed to put the brakes on the recovery we're having here. It's also not going to be good for American workers that are finally participating in this economic rally. So I think if the Fed just tones it down and lets things run and doesn't become an adversary for stocks, I think stocks have some room here.
What about Disney earnings this morning? They were better than expected last night. The company reported earnings per share of $1.48, revenue $14.31 billion. CEO Bob Iger also unveiling the name of the company's much-anticipated streaming service last night. It's called Disney Plus, which it hopes to compete with streaming giant Netflix, of course. Mark, will Disney be successful in competing in this streaming war? What do you think?
Well, it's great to see that Disney is putting their focus here. This is really a forward-looking, visionary strategy that Iger has in place. They're willing to take on Netflix, and they understand that's where the market's going. And look what the market valuation's done to Netflix. That is where it's going. And you also look at their legacy businesses. The studios are so strong in the pipeline for next year. It's like an all-star lineup. It's almost impossible for next year to not be big at the studio for Disney. And the theme parks were strong this year. The rate hikes held nicely and revenue was up. So they have a multi-pronged strategy that positions them incredibly well. I have high confidence in management executing it. And yes, I think they're in the right space at the right time.
So Disney with the streaming service, Mike Murphy, Apple's going to come out with a streaming service. I'm just wondering what this does to Netflix.
Yeah, it's not
Mark
good.
Avallone, thank you, sir. Thank you for weighing in this morning. We will see you soon, sir.